Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconen, along with Brianna Valesky, and we have Ryan Craver on the line from Emerging Brands. He's a vice president, and he's going to talk some retail with us in a very tricky sector. Ryan, how you doing today?
Welcome back, traders. I'm doing fantastic. Thanks for having me on.
And so how did you get involved in covering the retail sector?
So I spent a lot of time doing consulting work for Accenture, and as part of that, I was able to do some work at retailers like Best Buy and Nordstrom and Future Shop, fell in love with it, and then ended up deciding to jump ship into retail outside of consulting with Hudson's Bay, Lord & Taylor, and Saks, and spent some time there, and now I've shifted over to the brand side. So I've seen the consulting side, the retail side, and now I'm on the brand side and realize how important our relationships with retailers truly are.
And so when you're analyzing retail, I mean, there's earnings, same-store sales, comps, and everything. I mean, it's different for every sector of it, but what do you tend to focus on?
I tend to focus on the growth strategy and how they are changing with the changing consumer. If you look at how the consumers change their purchasing habits, how they find the product that they'd like to purchase, how they shop the stores, if you don't have a retailer that's focused on that and ensuring that they're creating customer experiences that are worthwhile and meaningful, you're going to have a retailer that's going to die a slow death. The consumer is faced with more choice than they've ever had, and there's more noise out there, so intriguing the customer is incredibly tough, and keeping them captive so that they continue to come to your stores is incredibly tough.
And what about consumers that are like ad agnostic? I mean, how do you reach them? I mean, there's so many. Like, how's someone going to decide whether to go to Target, Kohl's, or all these similar stores? What makes them different? What do they look for? What do they try and get across to the consumer?
Yeah, Eric Schmidt once said that there's more content created every 2 days up till the point of 2003. So we create more content every 2 days than all the way up to all the content that was created up till 2003. So you're totally right. It's very, very tough to find the consumer that you want to seek out and intrigue them and get them excited about your brand, your sales, your promotions, etc. The ones that I think that are doing the best job are focused on making sure that they have association with other partnerships or other brands that the customer doesn't necessarily feel like they're being advertised to. There are some retailers in the world, like the Nordstroms of the world, that do a great job of, it's very back-of-house advertising, so you don't feel as if you're being spoken to or marketed to nearly as much as some of the other ones that are loud and proud right in front of your face.
Okay, let's cover some stocks here that you keep an eye on and changing the retail environment and shopping. Amazon. Could you give us a short-term and long-term outlook for Amazon?
I think longer term, Amazon is a phenomenal company. I think they're going through the biggest shift they've ever had to right now. And what I mean by that is they're moving more into those margin-rich services. So they're having less reliance on purchasing product and selling it themselves. I think it's just over 40% in the latest quarter that third parties, like brands like the ones that I'm running, go onto Amazon, stock our product in their DCs, pay them once we do sell something, and then we also pay them for picking and packing it in the DC and shipping it to them. The reason why that's such a big change for them is instead of being accustomed to making 20, 30, 40% margins on wholesale product, they're now going to be entering services that are a lot more margin rich. And I think the more that they shift to that model, the more profitable they're going to be. And obviously we know that they just take their profits and reinvest. The second thing I think about is with the news about Net-a-Porter, they're continuing to evolve their breadth of selection. A a lot of people think of Amazon and they think low price, cheap goods that come to you quickly. With acquisitions like Net-a-Porter, with companies like ShopBop and their My Habit, you see them going into the much more exclusive brands that are higher price points. And so you see them extending their breadth of product selection, which makes them no longer look like just a cheap house for cheap goods. And then the third thing, I have a saying where I say all e-tail eventually goes retail. And what I mean by that is all the .coms eventually have to have some type of retail presence. We have yet to see them open an actual store. We've seen them open up a bookshop at Purdue University. We've seen them open up here in Manhattan a dispense type operation, but I think eventually they're going to open up a retail store. And I think that they're going to do it small and calculated, but I think they're eventually going to do it. And I think when you take those three parts, higher margins, extension of product, and potentially going brick and mortar, it's got a long-term, very, very rosy picture.
Very, very interesting comment there, Ryan, that you think they're going to go brick and mortar. I mean, why would they want to have the expense of buildings and leasing and employees? I mean, that's kind of like the opposite model of what made them successful. What was your saying again, and why would they do that?
Yeah. I think some product categories that they're in lend themselves to a better experience when it's brick and mortar. You know, having spent so much time in retail, what we found was customers' preference for shopping in store on certain categories is a lot higher. I'll give you an example. Consumer electronics, people are comfortable just checking them out online, shipping them to themselves. Jewelry, they enjoy going in, touching, feeling, playing with it, experiencing it. And I think, that's just a small example of a category that they think that they could definitely build small format stores and provide an experience to them. They won't necessarily ship, or they won't necessarily hold a bunch of the inventory in the store. They'll just have a couple of those units. You'll get to play with them, and then they'll ship them directly from the DC. So I think they can do a very calculated small format store where they don't have to open huge big box department stores, and yet they can still provide a pretty good experience and likely sell a heck of a lot more product.
Okay, so let's go to the flip side of that, and you go to like a Best Buy, okay, which has all these big stores, monster footprints here, and slowed them down a little bit. They're trying to have a bigger online presence, and I'm just throwing things out here, and this is like total rumor and innuendo, but why wouldn't they buy someone? Why wouldn't Amazon just go out and buy somebody that has existing stores? They have the stores set up. They don't have to worry about the brick and mortar. Why would they just go out and do that? And if they did, who would they buy?
Whew, tough question. You really put me on the spot here. So I think if you take Best Buy as an example, those are too large of format for what I think they would try. I think I was a little surprised that they didn't make a bid or at least discuss purchasing some of the Radio Shack stores. I think those types of sizes of stores make a lot more sense. With that said, I think they also realize that real estate right now and commercial leases are at, historic highs. So maybe they're waiting for another one to drop. It's not Radio Shack. I don't know who it is, but I think it's going to be much smaller format stores.
Okay, all right. So wasn't there a little rumor about that when Radio Shack was going down the tubes at Amazon? Was that rumored out there, or is that just you just giving a theory there?
That was a rumor out there. It seems like it's going to be more Sprint stores instead.
Okay, all right. Let's move on here. GameStop here. They have a smaller footprint in stores, and I mean, I'm not a big gamer, but could you just give us an outlook on GameStop?
Yeah, you completely led me into this one. I mean, this is the type of format that you would see in Amazon, and the positives of GameStop to me are the marketing and the innovation, they're best of breed. They announced obviously the Apple Pay in stores, which is fantastic. They use Internet of Things and beacons to market to their customers on phones. They send videos and content to phones when they get someone in the store. So they do a great job of getting people in the store and creating a sense of community for gamers who are passionate. The problem is they've got this massive shift to downloadable content and downloadable games. And we've seen this play out before. If you're not the platform for downloading those things, DVDs, books, music, those all move to downloadable. And so the quicker that they can build themselves as a platform for downloading that content, the more likely that they're not going to have issues. The problem I see is that they've got a lot of stores. And so as they shift to platform, to this more downloadable content, they've got to take a hard look at all their locations. And from the outside looking in, they've got too many locations today. And it's just how quickly they can manage that downsizing if they truly don't make it to platform, or if they do.
Okay, let's talk about someone that had some earnings today. Finish Line, looking good here. Give us your outlook on Finish Line.
So Finish Line, I think they've hit the nail on the head on a couple of things. First and foremost, this athleisure trend, I think, still has a ton of legs. The thought of wearing athletic clothes in leisure settings more every day. I mean, they used to be aspirational purchases. They're now more mainstream purchases, and I think there's a lot of legs there, and they're positioned well. Second thing is basketball is still incredibly hot. Price points are fantastic on basketball. The release schedules are fantastic. There's a sense of urgency to purchase the product, and they do a great job of that. And then the third thing is around running. And what running's done by Nike releasing shoes like Free, they've artificially brought up the price points as well. And those three things really, really help out a Finish Line who has great distribution in stores, has their own stores, has the partnerships with companies like Macy's. I think there's some more legs to run here.
Okay, let's move on. And you gave us a list of stocks to talk about, and I guess I talk about retail, and I think about Facebook here. Is this something that you cover? What's your outlook on Facebook?
So Facebook recently had their F8 conference. I think what they ended up doing, yet the media didn't really portray it, is they outlined their long-term vision and their strategy, and it's a phenomenal strategy. We already knew they had the scale, meaning they've got the largest social network in the world. They've got the fastest-growing social network in Instagram. They've got a messaging app that is global in WhatsApp, and they're starting to extend all their services across the entire Facebook platform. For retailers, if you look at where everyone's spending their time on mobile phones, it's in two places. Majority is in gaming apps, so they're playing games, and then the second place is in messaging. And what Facebook announced the other day was they're going to take their Messenger app and allow retailers to talk to customers within messaging. So if a customer is spending a majority of their time in either gaming or messaging, the ability to use the Messenger app for customer service, for promotional sales, for e-commerce is very big. They also said that they're going to launch buy it buttons officially on Facebook, and that's long overdue. All social commerce, all social media will eventually go to social commerce. So I think their focus right now is on small and medium-sized businesses, but they've got the scale and the ability for big box retailers to come after them and use them as a marketing and customer service channel, and they do the best job of anyone in social media today.
Okay, so I have to agree with you. We talked about it earlier in the week, and, just they're expanding their platform. They have access to the people. Why not, market news publications? Why not market retailing? I think it's, I hate to say it, but man, even the stock at $83, $83.50, and you look at a lot of the potential where they can bring revenue. I mean, they had the platform, they have the people, and they're just going to try and monetize it in any way possible. Could you give us just some stocks, some retail stocks that, first of all, you just do not have a lot of faith in, like these teen retailers like Aeropostale. I mean, does this have this company have a chance of surviving, or would anybody be interested in purchasing them?
Yeah, so I really struggle with Aeropostale. I struggle with, American Eagle, A&F. And the biggest reason is because all of them are very similar in terms of what they're offering the customer. To your point earlier, it's very hard to intrigue the customer today. And if they're offering a lot of similar things, it's going to be tough to get them in the doors. Secondly, the wallet share, so much of it has migrated to other purchases. It's migrated to things like iPhones, to apps, other things that they wouldn't have typically spent. So if you look at the consumable apparel purchases for the lower age brackets, you're going to see a lot less than what they historically spent. And then third, I think a lot of the fast fashion retailers like H&M and Zara, they're doing a great job of getting new, refreshed product out on the floor faster than some of these teenage retailers that you mentioned.
How about Lululemon? We got to talk about that one. Left for dead by Wall Street. Monster rally, of course, when I didn't have the calls on the thing. I still can't believe I lost money buying the 40 calls here looking at this chart, but somehow I managed to do that. Nice bump up to 70 here, pulling back a little bit. Give us your take on Lululemon.
Lululemon I'm a big fan of, mainly for a lot of the reasons I said for Finish Line. I think this athleisure trend still has legs to go, as I said before. I think Lululemon still has the lead in product innovation and the way in which they market. As this athleisure trend has picked up, the apparel industry does a lot of their copying over the course of 2 seasons. It takes about a year before everyone can get to shelf similar type of product. And now you see that athleisure product in the off-price locations. You see it in the bigger box retailers, and Lulu has expanded that market themselves. There's still more to go, but there's a lot more at the lower price points. So the one scare about Lulu is, are they going to be able to offer product at a lower price point for those customers that now, again, have moved from an aspirational purchase to a more mainstream purchase for athleisure product. But longer term, they're still ahead of the curve. They have a couple blips in product quality, but they're still ahead of the curve in terms of innovation and the types of products that they're coming out with, and most importantly, how they're speaking to that innovation in that product.
Okay, we got just a few minutes left here, and we have I got one more I know I want to ask you about. But before we do that, I want to go to the chat from Rob Hood, and he's asking about Burlington stores. I mean, you talk about a pretty chart here. Man, oh man, is this stock ever going to stop going up?
Yeah, I think Burlington does a fantastic job of finding closeouts at very, very high value from brands like ours, brands that want to move a lot of product. I think that they have done a fantastic job of going out to the market, finding those buys very, very quickly, and they've done so better than a lot of their competition. I think they will continue to be successful as long as they keep driving for these closeouts.
Okay, and what about FRAN here? Boy, let me look at this. Free Francesca's Holding Corporation. This is kind of a sleepy chart here. Any take on that one?
I don't have a great take on them. I know that they were hot for a while, a year or two ago. I think it's, again, more in that fickle area where you've got the teenage millennial customer, where we've got the wallet share issues, a lot of the wallets going to other categories other than apparel and accessories. So I just, in general, I struggle with any of the teenage millennial focused specialty stores.
Philip Van Heusen, PVH. Quick take on that.
Goliath. They've got the licenses of some pretty amazing brands. They've got the distribution that is probably unmatched in the world. I don't know where I would stand on their stock, but they definitely have the clout of the market in terms of apparel.
Okay, last one for you here. Walmart.
Walmart. Wow. So Walmart, I think what they've done very, very well is they've adapted to the digital world. They've invested a ton of money in building a research lab out in Walmart.com out in San Francisco. Their mobile platform is fantastic. They recognize that as a retailer, they have the highest percentage of shoppers that use mobile versus the other big box chains. I think the problem is law of large numbers. It's very, very tough for them to grow. I think they still demand the respect of the industry when you have meetings with them, and you know that you are definitely going into a meeting that you're going to provide a very, very high value, but you're also going to sell a tremendous amount of product. I still think when you compare Walmart to Target, I think despite Target's blips in Canada, I still think that Target is positioning themselves a little bit better, specifically within the U.S., but then Target doesn't have the broader international story.
Ryan Craver, retail expert and senior vice president of emerging brands at Digital Lamour Group. Man, what a great outlook on the retail sector. We're gonna have to have you back on again soon because it's so hard to analyze these stocks. But the way that you break it down and talk about them make a lot more sense to me. I really appreciate you coming on the show.
Thanks for having me, Joe.